for most internet companies, labor is really an R&D, and they have not been affected by labor shortages. But in the gig economy, and Uber in particular, labor shortages have resulted in lower revenue margins as they've given more driver incentives. And that has kind of delayed the revenue recovery, which hasn't kept up with bookings. So if you get in a labor supply with 7 million more potential workers relative to their 2 million they currently employ, you could see a nice uptick there, which could reduce wait times, increase bookings, and more importantly, increase revenue take rates, which I think the street is really looking for over the next 4 months. And if that happens, I think they could be considered more of a recovery stock, which would be good for the stock overall.
So basically, you think that the end of enhanced benefits will offer more workers to sort of the gig economy plays. What if they go elsewhere?
Certainly, there's other options. We think gig work is right for some of these workers. Up to 4 million gig economy workers have been receiving unemployment benefits. So we think a lot of those drivers will come back. Uber has published some survey data that definitely suggests that people are interested in coming back. Over 400,000 drivers have already come back. And we think you could see an uplift based on their survey data and also based on historical trends.
I came back today on an Uber because my car is flooded. And Justin, I was struck by how much more the cost was. Have they done the right thing in terms of using whatever pricing power they have?
Yeah, you're not alone. Investors have noticed longer wait times and higher costs to take an Uber. And so that has affected bookings. And I think they're trying to do their best to balance supply and demand. And in some countries where supply has come back, you've seen higher margins and prices already start to come in a little bit. So in the U.S., if supply comes back, we think that will be good. Can lower wait times, possibly reduce pricing, and despite the lower pricing, could increase overall bookings.
Yeah. So when you say when supply comes back, you're talking about driver supply, car supply, not supply of customers. It's the demand.
Yeah, absolutely.
That does
I think demand is outpacing supply right now. So what we're really looking for is driver supply to really kind of get the Uber market back in balance, which should help again bookings and margins.
And finally, Justin, what about Amazon, which, we've heard story after story about how workers who were in one industry pre-COVID have now showed up and gotten work with Amazon as they've just had this huge boom over the past year and a half. How do you think they're likely to be affected going forward?
Sure. So Amazon is one of the largest U.S. employers with about 1 million employees in the U.S. and more than that globally. And so they've had probably some shortages of workers. As you ramp up to the holiday, you try to add hundreds of thousands of workers historically, and that helps with deliveries. And so we think as the supply conditions get better, you might see faster delivery times with Amazon, and that could help overall orders. But we know every year they add hundreds of thousands of workers in the U.S., and if they can't add those this year, it could affect their holiday delivery. So having that supply could really help them this holidays. And for the consumer, you could see shorter delivery times.